Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of Proprietary Price, Pattern, and Time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, let's get into this market analysis today. We see the markets are basically flat on the day. We opened slightly higher and then just slowly floated down. You're looking at an intraday 10-minute chart, so each of these candles is a 10-minute candle on the SPY, which mirrors the S&P 500. So it gives you a good basis for what the market has done today. Again, you can see the little bit of a gap up and then a slow fade. We went briefly to the negative side before floating back, and we're hovering basically flat to slightly positive today. After the nice move up yesterday, this is known as a consolidation day. All right, so a consolidation day. Yesterday we had the nice up day. Today is an inside day. That again would be referred to as bullish consolidation, the beginnings of bullish consolidation at least. Looking at a couple other keys today, what we are seeing is most sectors are mixed. Definitely not like yesterday. So yesterday everything was green across the board. Even Apple got a bid yesterday. Apple being up about $10. Today we're actually seeing Apple down 5, so giving back about 50% of the gains yesterday. Let's flip to that chart. And Apple, interestingly enough, is barely holding on to these support areas. And again, if you just draw a trend line right here, this is really some key support on Apple. Right here, pivot lows earlier in the day, and it's holding here. Now, with the pattern Apple's actually making is slightly bearish, though. So again, while Apple was a nice mover yesterday, the big question is it going to sell off and take out the lows right here? All right, that would be a bearish signal. As long as it doesn't take out the lows, it actually could be called a possible bottom. So that's really what we're watching here on Apple, is to watch to see how it trades into the end of the day and really how it trades the next few days. Over the next few days, what you're looking to see is this high pivot here. All right, so this high pivot here from yesterday, you want to see that get taken out and closed above on the daily basis. So at the end of the day, you want to see a close above that rather than this low get taken out and closed below. So really that's what you're now watching on Apple. You want to see which one happens. So do we sell off and close below this low, in which case we're going to about 395, which is your next stop on Apple? Or can you see a push up and a close above this high, which in that case, it would mean Apple would be headed to about the 465, 475 area, possibly as high as 500 in the short term. So it's really a wait-and-see type situation. Right now, you would call this inside consolidation. Again, notice the sharp move up, and then yesterday afternoon to today, all inside consolidation as well. So right now, as long as, again, you don't take out that low, you would have a slight positive bias on Apple. All right, it's rare to say that because, I've been negative on Apple since the 700 level. But actually, based on what we're seeing here, at least until it takes out that 419, 420 level on a closing basis, you actually would have a slight positive bias on it, okay? A couple other stocks out there in motion. Google, after a monumental move up yesterday, having a small minor pullback. Here's your daily chart on Google again. Please notice this down move today, not negating the whole move up from yesterday. This is where you basically went from this point all the way up. But, nonetheless, you are seeing about a 50% retrace of the move yesterday, just like Apple. I mean, it's interesting because Apple's retracing about 50% as well. Same thing with Google, okay? So we'll watch and see how that all trades out and go from there. Couple little notes about Google here before I step on and kind of move on. What we are noticing is that Google should have more upside to it, even though today's a little bit of a down day. I am bullish on Google to about the $460 level. Right around 460 should be a top area. I will isolate it down, give it out to my members as a swing trade alert on the short side when it achieves a master level. I'm not sure if that's 465, 455, I'm not sure if it's 865 or 855. It's somewhere in that vicinity, though. And again, as we get closer, I'll be able to isolate that down and give it to our members. A couple other stocks having decent days. JPM minor kind of loosely based topping tail yesterday. Today it's retracing a good portion, but it has not taken out the highs. So one thing to watch on JPM here is this high pivot from yesterday. Because you do have a pseudo topping tail, you want to pay attention to that high. And here's the high on the intraday yesterday. So you're really watching to see, do you get above and do you close above this high on the daily portion? So at the end of the day, are you above $50.10 to 11 cents right there? As long as you stay below, technically you could make a case that the topping tail is still intact. Now, again, it's a very loosely based topping tail, so I want you guys to understand that it's not a very good one, but it is something to pay attention to nonetheless. Okay? So we'll continue to watch and see how that all plays out. And again, watch and note that. JPM getting a little bit of an intraday bid here, just a minor one. Looks like markets are catching a small bid as well across the board. Gold been up $1.50, nothing doing there. Just kind of same thing. Markets, financials continue to be strong. Bank of America is doing pretty well here. That's continuing to uptick, so we'll continue to watch that. Chevron's up, Exxon's down. One other thing I want to mention, there's a lot of talk about the markets and continuing to break highs here, and Dow yesterday hit a new all-time high. Today it's kind of retracing back towards those levels, maybe even trying to get above those levels. But the one thing I would just point out, there is a negative divergence out there that I think we should note, and that negative divergence comes in on copper. If you look at the JJC, which is the copper ETF, this is down 26 cents today, but look at the chart here, all right? Look at the price action. Now, the reason why we want to pay attention to copper is because copper, throughout history, has been one of the building blocks for a strong economy, especially a strong global economy. If you go back to 2007, look at where the JJC was trading back then. We can flip to the monthly chart if we want to look at that. So going back to those levels, and it's, you can see way up here. So the fact is, when we were trading up there, and then look at the collapse when the markets collapsed. So it just bears watching, because if copper does continue to be a leading indicator, then why has copper collapsed here? And look at this collapse over the last 2 weeks. I mean, it's been a pretty dramatic collapse. The other thing that worries me about copper as well, so right there is a negative divergence. But if you look at if you zoom out on the chart and look at the larger picture on the JJC, you actually have a huge head and shoulder pattern. It hasn't triggered yet, but it's one of those head and shoulder patterns that if it ever does trigger, you're looking at copper going back to the lows of 2009. You are looking at a possibility of a move back there, which is, again, it's very scary to think about what happened in 2009 to 2008, 2007 to the global economy, to the U.S., the financial crisis, the housing collapse, etc. And then again see a pattern like this. And again, let me just show it to you here. Look at this. So here's your head and shoulder pattern. Okay. Now again, the trigger is the neckline break, which hasn't occurred yet. That's right here, and again, it's not even quite there yet. But this, as in multiple months out, like if you're looking 3 to 5 months out, this would be a very big, maybe even less, maybe two to 4 months out. This would be a very, very interesting chart to pay attention to. Okay, so just a heads up there. My projections continue to show that the Dow will continue to move up relatively over the next few weeks to month or so. We should see the S&P make new all-time highs at some point, but I do think once that happens, once the S&P makes new all-time highs, then I would start to get a little bit more conservative and possibly look for a market that starts to break down. And the question is, if this copper chart is a leading indicator, is that what it's telling us? Is it telling us about future problems in the market while everyone else is jumping in the markets at these highs? Could it be putting in a little bit of a top? So just something to pay attention to. Again, I still think we do have a little bit more upside in this market. Nick and I have both been saying we'll be breaking those highs. We already broke the Dow high. Now I think it's the S&P's turn. You'll be a couple bumps along the road, but we should break those. And then again, once that kind of finishes up, look for downside. And again, it's a matter of how much downside at that point. All right? Alrighty, guys. Have a great afternoon, great evening. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial. Start profiting with the pros.